Thank you for tuning in and welcome back, team. In today's episode of Real Estate Advice, you'll learn about first-time homebuyer classes and starting here with this video right now. My name is Andrew Finney, your real estate geek. If you need help finding a top agent where you live, or if you simply want to drop me a line to say hello, my contact info is below. If you haven't already done so, please go ahead and subscribe to this channel now and like this video. Thank you. So let's talk about this, team. You know, whenever you're out there as a first-time homebuyer or even a seasoned homebuyer that hasn't purchased a property for a while, our first-time homebuyers class and first-time homebuyer education can be very, very pivotal to your success. So there's some different things that you should really know, and I'm going to go over 12 things today in this video alone that you'll have a very good idea and understanding of what to expect from the home buying process going forward. And for reference, if you're out right now and you're thinking about buying a home, and even if you're not going to be buying that home for 12 or 18 months, go ahead and start following along this video. Use the resources and the links that I put in the show more description below to help aid in your success. The more prepared you are, the easier the home buying process is going to be, the more successful you're going to be, and you're going to have a really darn good time finding that new dream home of yours. So the first thing is to understand how down payments on mortgages work. So when we're talking about down payment, you may have heard a lot of times that 20% down is like the standard. While 20% down is definitely favorable, it's not realistic to a lot of first-time homebuyers or even the seasoned homebuyer unless they had a property that they could sell and use for the difference of their down payment. The reason being is that consider that if you're buying a $300,000 home, 20% of that is $60,000. So what's a buyer supposed to do? Because that's not exactly chump change. What are you supposed to do? Well, fortunately, there's a lot of different type of loan programs, and right off the top, your four main categories of loans are going to be your FHA loan, your VA loan, your USDA loan, and your conventional loan. Underneath those programs, you'll find down payment assistance and home is possible type loans that can assist you with your down payment amount. And it's very important at this point in the video to also share with you that you're going to also have what's called buyer closing cost. Buyer closing costs are generally 2% to 4% of a sales price of a home. So going back to the home that we were mentioning earlier in this video is an illustration of a $300,000 property. A $300,000 property, if your buyer closing costs are 2%, it means that you're going to be paying $6,000 in buyer closing costs. If you're paying 4% in buyer closing costs, that means you're going to need to be prepared for $12,000 on top of your down payment. Now, if you're working with a home as possible or down payment assistance program, the great news is you only need to be prepared for your buyer closing costs. Yes, buyer closing costs are negotiable in a purchase agreement, depending on the current market condition when you watch this video. If it's a seller's market, a buyer's market, or a more balanced market will dictate your success in either getting them or not getting them. So it's really important to understand your market conditions as well. So this is a lot of information right up front about the down payment assistance and home as possible programs. What you want to do is actually meet with a trusted real estate advisor in your area and ask them for a great introduction to a local loan officer as early as 3 to 12 months before you get ready to purchase a home. That way they can work with you, help you go over the next 11 points I'm making in this video, and so that you'll be comfortable and confident every step of the way of buying your new home. So let's go ahead and move past that, since that was a lot of information, and move into home buyer education classes. There's a lot of them that are done. There's a link that I'm putting down in the show more description to HUD, which is Housing and Urban Development, where they'll show you some different programs that are going to be available near you. Some of those courses are free, some of them charge a small fee. Some of them are in-person classes, some of them are online classes. If you're going to be getting a down payment assistance or home as possible program through a great local loan officer, what's going to happen is more than likely you're going to need to have a certificate of completion for one of those programs that you're using, and it will need to be a HUD. And again, HUD is Housing and Urban Development Approved Agency. So if you are looking for some help with your credit score, you don't know where to begin, another great source of information is the National Foundation for Credit Counseling, where you can get some help. Again, that link is below as well. And then you also have the Association of Independent Consumer Credit Counseling Agencies. Link is down below as well. So credit counseling can really help out with things that you're looking for going into as well. So now at this point in the video, you might be thinking, okay, Andrew, that's really great information. I'm jotting down some notes and thank you for sharing that. But how do I even know how much home I can afford? And that's a great question. Now, when you're looking at on online sites like Zillow, Trulia, Realtor, Redfin, what have you, whenever these other sites give you information about the mortgage, and it just came up yesterday with a wonderful lady that called me from Zillow, and I explained to her what was going on there. Normally, they're only showing you what's called the principal and interest payment. They're not showing you the full picture of what the monthly mortgage is actually going to cost. Your monthly mortgage is going to be comprised of 4 different elements. Those elements are the principal, the interest rate on that mortgage, so the interest, your property taxes, and your homeowner's insurance. Those 4 things combined comprise your monthly mortgage payment that you're going to be realizing as you pay every single month going forward on your new home. The 5th thing that you should consider that is separate and distinct from your mortgage payment, but it's still going to affect your monthly budget, is an HOA, which is a homeowners association, also known as a CIC, which is a common interest community. So when you hear HOA, you hear CIC, just think of the same thing as a homeowners association, and those do have monthly fees as well. So you need to be prepared for everything from your principal, interest, taxes, insurance, and your HOA, combining it together so that maybe the principal and interest together are only $1,200, but maybe after you factor the rest, maybe you're at $1,500 or $1,600 a month for your new home. You need to be able to budget off of that. So I'm going to put up a link to another video I did about how much home can you afford, and I'm also going to make a link in the show more description available for the mortgage calculator on my website. What you're going to like about that, it's very, very in-depth, but don't be afraid of it. It's pretty simple to figure out once you start getting some rhyme or reason to it. You're going to put down the amount of home that you want to purchase. Then you're also going to be looking at what your estimated mortgage rate is going to be. Just simply Google mortgage rates for today's rate, and obviously don't believe the lowest of them. Always err on the side of safety with the higher rate. Because if you do that, then you're going to be preparing yourself for success, especially whenever you've already budgeted X number of dollars and a local loan officer says, oh, guess what? You can actually get approved for this and pay less, right? So that's always good to err on the side of caution whenever you're estimating these things. Google your property tax rate. Go ahead and put in that number. And then for the homeowner's insurance, I already have a pre-designated number in there for you as well. Once you do that, it's going to give you an idea of what your monthly mortgage is going to look like. It is no substitute for sitting down with a local loan officer. It's simply a resource and a tool that can give you a far more accurate snapshot about how much home you can afford, along with what's called your debt to income ratios. And we'll get to that in a couple of points. Now, the 4th thing that we would like to cover in today's video is knowing about more classes for home buyers of any income level, even if you've owned a home before. There's a program that's available in different states called NeighborWorks America. They are a lending company, but more impactful than them being a lending company, because I'm not endorsing them or anything, and I'm not doing that. But what I am doing is sharing with you that they have some interesting specialty programs that may be beneficial to you. It's going to be up to you to go to their website and check it out and see if that's going to be beneficial to you. My strongest recommendation is always talking to your trusted real estate advisor for a worthwhile introduction to a top performing local loan officer. That's where I always suggest you get your mortgages with a local loan officer. They're more familiar with any type of local special programs through the state, through the city, through the county for the down payment assistance, home as possible programs, and they've likely performed several of those loans, if not many of those loans, and they'll know how best to help you. So, you know, what was interesting is on a link that was available on real estate.us news, so US News underneath the real estate page, they'd actually made a comment about a survey that NeighborWorks did of 1,000 adults. 75% of the Americans thought that the home buying process is complicated, and guess what? It kind of is, and that's why it takes a village to buy and sell a home. Now, it's really important that you know that up front so that you don't get overwhelmed with the process and that you work with a trusted real estate advisor, right? That's going to help guide you and that's going to have the right experience to assist you along the way. There's a lot of things that you can do from this video and the other videos on my channel to best prepare yourself for the home buying journey. So the next thing that we're going to take a look at is the debt to income ratios. Now, you're going to be hearing DTI a lot. There's a lot of acronyms in this world, and when it comes to real estate and lending and title and all this fun stuff, it's no different. DTI is an acronym for debt to income ratio. Essentially what they're going to be looking at, a lender's going to verify 4 different things whenever they issue what's called a pre-approval letter. And we'll also talk about that in a moment as well. So a pre-approval letter, just for reference, is whenever a lender has verified your income, And the way they're going to verify your income is getting your last 2 years tax returns. They're also going to be looking at your W-2s, and they're also going to be looking at your pay stubs. They're going to verify your assets. They're going to ask you for 2 months of bank statements. They're going to ask you for any of your investment accounts, 401ks, thrift saving plans, what have you. They're going to be asking you for that. Obviously, they're going to run your credit, and they're going to verify your credit score. The fourth thing they're going to do is verify your employment and that you're still employed at the time that you apply for the loan, and also a few days before you get ready to close on the loan to make sure there was no changes to your credit score or employment situation. So whenever a lender takes all this into consideration, they're going to come up with what's called a debt-to-income ratio. Going back to point 3, you actually have the opportunity to know what what's called your front-end debt-to-income ratio and back-end debt-to-income ratios are on an estimated basis as you put in your information to use that resource that's available. Again, it's only a tool, it's only a resource. The definitive answer is going to come from the local loan officer that you choose to work with. So it's really important to understand that there's federal guidelines and rules that are issued about what kind of debt-to-income ratios you can have for a certain type of loan. Some are very lenient, such as maybe a 45% front-end ratio to a 55% back-end ratio. Something maybe like an FHA loan, VA loan, or some kind of federally insured loan, right? Those are the kind that you're going to be a little bit easier, going to be a little bit flexible with your debt-to-income. So I keep saying that word. So what does debt-to-income actually mean? A debt to income is actually taking a look at your holistic point of view of your total monthly gross income. So let's say, just for easy math, let's use the figure of $10,000. Let's say that you earned $10,000 a month. And $10,000 a month, that's your total gross income. Now let's say that you have monthly debts of $2,200 that are comprised of your credit cards, they're comprised of maybe student loan debts thrown in there, and you also have a car note. And all of that together, and your credit cards, and all of that together equals $2,200 a month. If you divide $10,000 by $2,200, what's the percentage you get? You get 22%. So that you would have a debt to income ratio of 22% on your front end. So the back end is whenever you include that mortgage. So going back to your earlier example of the $300,000 home, let's say that house was going to cost you $1,600 a month. So now a lender is going to add that $1,600 to your $2,200 a month of debt, and you come out to $4,800, which means now your back end debt to income ratio is 48%. In this illustration, in this example, you'd be qualified for different loan programs that allow for an up to 48% back end debt to income ratio. That's how that works. Again, I know that's a lot of information, and that's the purpose of this video, is to better prepare you and help you along the way. There is a lot to it. It doesn't have to be as complicated as this. It does not have to be complicated when you're working with the right kind of real estate agent and right kind of trusted real estate advisor. Again, my contact info is below if you need help finding a top agent where you live. So let's go ahead and move on to point 6. Well, home inspections and what's called buyer due diligence are pretty interesting. Now, this is going to occur after you make an offer on a house and after your offer gets accepted. You're going to have a few days of due diligence. Different states might have different what's customary time periods or mandated time periods for a buyer to have the right to perform their due diligence. Due diligence is going to consist of your home inspection and ordering your home appraisal. Now, it's also going to consist of any other research that you would like to get done and have a right of refusal if it doesn't check out and meet the mustard to you. So it's really important to note that home inspections are always strongly suggested. Now, it's up to you. You do have the right not to have one performed, or you do have the right to have one performed. As a trusted real estate advisor, I strongly encourage you and highly recommend that you get a home inspection performed 100% of the time, all the time. Okay, it's going to cost you a little bit of money, but it's going to be well worth it by having insights into that property's condition. At the same time, it's important to note that you probably look at some of the other videos I've done about negotiating repairs after a home inspection, what a home inspection is. I've made a lot of videos about this kind of stuff to this point. And the reason being is sometimes, especially as a first-time home buyer, it's pretty easy to be a little bit nervous right now, isn't it? It's pretty easy to feel anxious and have like a little bit of fear in your person and in your being. So there's a couple of different points I want to make here right now. Number one is understand that fear is an acronym, and the acronym for fear is false evidence appearing real. The quickest way to replace fear or false evidence appearing real is with knowledge. And with knowledge comes what? Power. And as you feel empowered comes what? confidence. And as you feel comfortable and confident moving forward through the process by watching great videos like this and talking to your trusted real estate advisor and local loan officer, you're going to feel a lot more comfortable. The only reason people really experience fear is fear of the unknown. By making the unknown known, you no longer have a reason for false evidence appearing real. That's the one thing I'd like to make to you. The second thing is no home is perfect. Don't freak out over the home inspection. Talk to your trusted real estate advisor, see what kind of repairs you can negotiate, and see what can be done to help you guys out in getting that home fixed, or if the seller is going to offer you a credit. Now, the seventh point in this video is actually going to be working with a trusted real estate advisor. I've made 2 videos now about picking a real estate agent and how to find them. Again, if you need help finding one, please let me know. I'm definitely happy to help you with that. Just shoot me an email to my contact information below. First of all, you know, a lot of people think that if they have a family member that's a real estate agent, that's a good idea. Or if they have a friend that's a real estate agent, that's a good idea. And that only makes sense because it goes back to when we were talking about fear. It's somebody you already know and hopefully trust, and you like working with them, or you like being around them. So you think, oh, well, they do real estate, so let me work with them. What I would share with you is, regardless of familiar relation or friendships, is to always, 100% of the time, always Google the agent. And what you want to do when you Google the agent is you want to look at their online ratings. You want to read what past clients have shared with you and testimonials. You actually want to take a look at that. You want to look at their past sales history, and it's very easy to do on sites like Zillow, where you just type in the agent's name. So if, like for instance, if you wanted to Google me right now, knock yourself out, right? Have a good time with it. Just type in Andrew Finney, Zillow reviews, and bam, you'll land on my page. If you type in Andrew Finney, you're going to get 2 things, by the way, kind of fun. Showtime has a show called Ray Donovan, and there's an actor in there that just so happens to do real estate, and his name is Andrew Finney. So, but I'm the real Andrew Finney, and yes, I'll stand up, right? So, kind of geeky fun there. Anyways, let's go ahead and move past that. Go ahead and always make sure that you're verifying the agent's ratings, reviews, reading those testimonials, and past sales history. For reference, you would like to have an agent that has closed at least 12 homes in the past 12-month cycle. So you're getting a agent that's always up on the process and the legislative changes and contract changes along the way. As a first-time home buyer, I do, you know, it's kind of a double-edged sword for agents, at least whenever I say this. I'm not saying not to go with the new agent, because all agents, including myself, we all got our start somewhere, and it's a very hard business to be in and become a top agent. It takes time, it takes perseverance, and to do that, to get to where I am today, and for us to continue to grow. That being said, as a first-time home buyer and first-time home seller, I strongly recommend that you work with an experienced agent that checks out on the minimum requirements that I share in the videos, like picking a real estate agent. And the reason being is that way you're not both learning the process as you go along. You're going to be in stronger hands, more experienced hands. At the same time, if you're that seasoned home buyer that's been through the home buying process 3, 4, 5 times, then pay it forward and maybe work with the newer agent, just so that you're paying it forward. You're helping somebody build it up if that's what you want to do, and you have that within yourself to do that. If not, then always work with the agent that did you the best. So number 8 is conserving water and electricity and calculating your monthly budget with your bills. So essentially home ownership. On Fridays, for reference, every Friday I put out a new home ownership video about homeowner tips. Go ahead and clue in on that, and that'll address point 8 for you. The 9th one is preparing, like what we were talking about at the beginning of this video. Your buyer closing cost and your down payment is extremely, extremely, extremely important that you have 2 sides of this transaction that come out of your pocket. Number 1, you have your down payment. And if you don't get down, or if you're not going to use a down payment assistance or Home as Possible program, it's very important to plan for both your down payment and your buyer closing cost. Again, buyer closing costs are generally 2% to 4% of a sales price. It is also important to note that with the down payment assistance and Home as Possible program, a lot of people get really excited because they're going to get free money. Understand that nobody is giving you free money. The trade-off is that you will have a slightly higher mortgage interest rate to pay for the program. That's how it gets done. Now, if it's between you spending the next 7 to 10 years accruing a 20% down payment or biting the bullet and getting a slightly higher interest rate to use a down payment assistance or home as possible program, I have done other videos about the wisdom of biting off on buying a home as quickly as possible as soon as you feel comfortable and ready to do so. I'm not saying that as a trusted real estate advisor or a real estate professional. I'm saying that as your friend, and I'm saying that as a matter of truth. Home appreciation and mortgage interest rates tend to go up over time. The longer it takes you to do that, and as you account for things like inflation, it costs you so much more money to wait to get the 20% down payment than if you just would have bought it today, and your home equity would have gone up over that time, and you would have had built up home equity as opposed to losing money renting. Just a side point. If you have questions about that, let me know. The next thing that you can learn from home buying education courses and classes is how to shop for a mortgage. Again, starting with the top agent in your area, a trusted real estate advisor that's familiar with working with first-time home buyers and the programs available to them will greatly go a long ways towards getting you towards pointing you or introducing you to a trusted and top performing local loan officer that can assist you with your mortgage options. Don't be enticed with teaser rates. There's a lot of them going on right now. I've seen them on YouTube videos on the beginning sides of adverts. I've seen them on the television. I've heard them on the radio. You know, things like Quicken Loans, online lenders, you know, teaser rates, big banks, credit unions. The problem is that none of them can really perform on that rate because it's normally less than the prime rate. It's called a prime rate. And unless they're going to take a loss on that mortgage, they're really not going to be sitting so pretty to give you that rate. It might be a rate that they're offering to their internal employees, or it might be a rate that they're offering to their family members or what have you. At the end of the day, it's very unlikely to be the rate that you're looking at. If you read the fine print, those rates are normally for adjustable rate mortgages, like a 5-to-1, 7-to-1, 3-to-1 adjustable rate mortgage or something. And it'll say based upon a 20% down payment, all kinds of rules and conditions apply. The rate is what captures people's attention. It's called clickbait, and stay away from clickbait. Get the honest scoop up front so that you are well prepared and know what's going on moving into your home buying journey. Now, the 11th thing is knowing how you want to take possession of your property as far as titling. If you're buying this home solo, it's pretty easy. You're just going to take full possession of it and have it titled into your name. If you're going to do, if you're married or if you're buying this property with someone else, you might be doing something called joint tenancy with rights of survivorship, or maybe not. It just depends. Or you have tenants in common. There's a whole lot of different ways of taking title. I've made a video about tenants in common specific, and in the future I'll make another video explaining the different types of ways to take possession and ownership of your property. The 12th thing is, if you're wondering where to find down payment assistance, the first place to turn is always to Google and finding a trusted real estate advisor, or Googling down payment assistance / home as possible programs in your city and state. That's how you would Google it. Down payment assistance programs in Las Vegas, Nevada. Home as possible programs in Las Vegas, Nevada. When you do that, you're going to return a lot of results. It may seem a little bit confusing, and it may be. So that's why we also, from point 2, and it's in the show more description below, are different ways of finding home buyer education courses. Again, my strongest recommendation to you about this is to reach out to a trusted real estate advisor anywhere from 3 to 12 months before you get ready to buy your new home, so you can go ahead and set up a time to have a buyer consultation with that agent and an overview of the home buying process. That agent will be able to provide you right there locally for you the information that you need to start preparing yourself to buy your home in the next 3 to 12 months. Now, this has been a longer video. It has a lot of meat. It has a lot of potatoes in this. So I really appreciate you sticking in there with me, team, on this video. This video will be pivotal to your success in your home buying journey. So now it's your turn. Tell me what you're thinking about this video in the comments section below. Tell me what was the most impactful part of this video to you out of the 12 points that I've made over the course of this video. Was it number 1, talking about down payment assistance and home as possible programs? Was it number 2, about home buyer education classes? Or was it perhaps knowing more about finding a real estate agent and from point 7? So tell me what you got out of this video in the comment section below. Now, I'm going to go ahead and put my contact information up. If you'd like to reach out to me to help you find a top agent in your area to work with, please let me know. Send me a direct email to the email on the screen and tell me more about your situation, and I'll respond to you, and we'll just go ahead and make that happen. Or if you simply want to drop me a line and say, hi, hey, tell me what you're thinking, tell me how you're feeling about the videos and the content, I always love to hear from you as well. If you haven't already done so, I'm going to ask you to do 3 things. Number 1, please subscribe to this channel. Number 2, please like this video. Number 3, please share this video around with someone you know is going to be able to help. In between now and next time, I'm wishing you and yours a lifetime full of love, wealth, abundance, and happiness. See you soon, team.